Good afternoon, this is Sean Golding with Golding & Golding, here to go over the very common question of whether an IRS voluntary disclosure can eliminate or avoid criminal tax risks of prosecution. We did a presentation on this a few years back. We have blog articles going back a few years. We just recently updated it. But with the VDP having changed and morphed over the past few years, let's go through the basics. The short answer is yeah, it typically will avoid criminal prosecution, not always, not guaranteed, but let's see how we get there. So first, what is a voluntary disclosure, right? Voluntary disclosure is when a person voluntarily comes forward in order to disclose unreported offshore or domestic accounts, assets, investments, or income. When you hear the term offshore, that doesn't necessarily mean anything nefarious. It doesn't mean you've got, money in offshore tax havens or accounts hidden. It just means outside of the U.S. They use those words interchangeably: offshore, overseas, international, foreign, things like that. So if a person is willful, then they do something called the Voluntary Disclosure Program. You might see it as VDP. And there used to be an offshoot of VDP called OVDP, which was specifically for offshore related matters, but they merged those programs back in 2018 so that the traditional voluntary program, which has been around forever, no longer has a specific offshoot for offshore. Instead, whether it's domestic or foreign offshore, it's all handled specifically in the Voluntary Disclosure Program, known as VDP. Now, one other thing to keep in mind is the internet is a very dangerous place, especially when it comes to international tax and all the fear mongering. Especially for ethical people, we're all ethical, right? But especially for people who are worried, let's say, or afraid, some tax professionals will fear monger or scaremonger a taxpayer into believing that just because they didn't report, that they're willful. It's important not to go down that rabbit hole, okay? If you're non-willful, the process is much simpler and much more straightforward. Once you kind of dive into the willfulness pool, it's the deep end and it's hard to get out. So something to keep in mind before going that route, especially with the new version of the program where you have to basically certify under penalty of perjury that you're fraudulent and that you're attempting fraud. You want to be careful. So what is required when you do VDP? Well, first, it has to be full and complete disclosure. You can't just report the accounts you know that are going to be reported because maybe there's a FATCA agreement with that country, Foreign Account Tax Compliance Act, and then decide, you have accounts in other countries where maybe you have a great relationship or your family does with the banking institution and they've all but guaranteed that they're not going to report you to the IRS. Things change, people change, seasons change, right? If that was to change down the line and they did report you, the IRS finds out, then it could blow the whole agreement up, right? It has to be a timely disclosure. So you have to do the disclosure before the IRS reaches out to you, before you're under audit or examination or certain criminal investigations. And then expanding upon that, if the IRS was to get the information from like a John Doe summons or another summons or a third party or one of those pesky whistleblowers who gives you up, then they don't have to accept your voluntary disclosure, which can put you into a precarious position because now you've done the pre-clearance, so they know that you're out there, but they're rejecting it, which is pretty rare. I don't think we've ever had that happen here. But let's retreat back to the main question, which is whether you will avoid criminal prosecution. The answer is typically yes. The IRS does not absolutely promise you that you're going to have immunity or guarantee that they're not going to enforce any criminal prosecution, but we've done several thousand offshore disclosures, several hundred OVDP and VDPs, and we've never had anyone prosecuted who went through the program and gave a full and complete disclosure. In fact, we've never had anyone prosecuted. That's not the goal of the program. The idea is they want to bring people in. Yeah, the IRS can get the information from FATCA agreements and whistleblowers and all that stuff, but there's still nothing better. Deferred prosecution agreements like with a lot of the Swiss banks, but there's still nothing better than having the taxpayer come in on their own volition and provide the information, okay? So if you're going to voluntarily disclose, chances are very high that you are not going to have any criminal prosecution against you. You will have to pay civil penalties. They generally don't waive the civil penalties. I mean, especially with FBAR, they're not prone to doing that. It's not like the old VDP where you opt out. It's a different process. And so if you're going into the program, you want to go in with the idea that you're probably going to pay a pretty hefty penalty. If any practitioners are telling you that they're going to waive that penalty, make sure you get that in writing. When it's all said and done, you'll typically get a closing letter. It's a 906. And then the matter is essentially closed, again, presuming that it was a full and complete disclosure. You also have to make sure that you stay in compliance post-compliance. So the IRS can still investigate you. They can still audit or examine you. But typically, as long as you did a full and complete disclosure, you won't get prosecuted and they won't open up any matters that were closed, let's say, through the 906 closing letter. Again, to reiterate, if you are out of compliance, you don't want to take the leap that you're willful until you've really done your due diligence, okay? Don't let anyone convince you that you're willful if you don't think that you are. People will throw out terms like reckless disregard, willful blindness. Yeah, it's true. If any of that occurs or applies, then you would be considered willful, but it's not as simple as I didn't know, maybe I should have known, and so now I'm automatically willful. If you're non-willful, there's lots of other programs that are available, the streamlined filing compliance procedures, the delinquency procedures, and there's multiple versions of either of those two, and then reasonable cause, qualified amended return, just depending on your specific facts and circumstances. We have a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.